What's up, traders? Welcome back to another video. Today we are going to look at high of the day trade setups. We are going to look at two different types. So make sure you like, make sure you subscribe, and let's jump into it. So as Stacy Buck says, just because the price is at the high or at the low of the day, that does not mean you start selling or buying. You must understand one thing. Being at the high or at the low of the day, that is just one qualification. That is how you, let's say you are looking at maybe 5 different pairs. The best way to identify your best trading setup is to sort the instruments by which instruments are at the high or at the low of the day. So those are the ones that you focus on now. Once you focus on those instruments, now you start narrowing down. Now, are we at the high of the day? Let's take an example of Nasdaq. Yesterday, Nasdaq gave us a very nice textbook trade setup. Now, this is the high of the day prior to the 12 candle window. This was the high of the day. This was the low of the day. When I came to the screen, it was only Nasdaq which was at the high or at the low of the day. As you can see, I only follow oil, Nasdaq, and gold. So the first hour, now we are at the high of the day. That is our first qualification. As you can see, the market came to the high of the day during the first hour, and that sets our new high of the day, high of the session. Alright, step 1. Are we at the high of the day? Yes. Step number 2, the second hour now. The second hour, we want the market to come back to the high and trigger other time frame traders. So when you are looking at maybe multiple instruments and you have one instrument that goes to trigger other time frame traders and the other one does not, that makes your work easier, because now you can eliminate those two as, potentially they might be setups, but they are 50-50. We are looking for a trade setup that, is skewed on our probability of us winning. So, the second hour, they break above the high of the day. And then, as you can see, we have our M pattern above the high of the day during the second hour. So we are looking, we want to see whether they have locked in the high. As you can see, we have our M pattern, and then break of structure. They broke structure. So what are we looking for? After they've broken structure, this is a market that is potentially about to reverse. Now, as you can see, this is a pump to the high in the first hour. Pump to the high. Meaning all these lower lows, this is where the money is. These are potential targets. That is where the money is. So we want to see a retest and an engulfment to know that they have already locked that high. They are not going back. And that there was no, we want, and boom. Look at that. They have retested. So as you can see, there is this trade setup. Everyone knows well, if you started forex a long time ago and you've already read baby pips, this is what happens. We go higher, low, higher, high, higher, low, higher, high, higher, low, and then we fail to break the next higher high, and then we break structure. So this is a market that is potentially going to reverse. So what do we want? We want to see a market that comes to retest there and then give us an engulfment for the move down. This is what we want to see, and it is exactly what happened here. Textbook setup. They went higher, they failed to break the high, they failed to break the high again and broke structure, and then now this retest is this. For the locking, they have already now locked in the high of the day, and that is where you get in. For your 25 pips, 50 pips, whatever. But you know, for me, 30 pips, 25 pips, that's enough for me. Now, let's go and look at gold. You'll find that just because we are at the high of the day, that does not mean that you have a trade setup. You see, yesterday gold, well, for those who were looking at continuation, this is what happened. So this is our high of the week, this is our high of the day, this is our low of the day. So the first hour sets the high and the low of the session. But that right now is not relevant for us because we want the market to go to the high of the day. The market comes to the high. This is the high of the day. The market comes to the high of the day, but they broke structure, but they've not given us a new, well, they've not locked in the high. So they also have broken above again. So that means our high of the day is invalid. Once you see that, you start thinking, so there is no setup. Now, since for me, I don't really focus on continuation patterns because, well, I'm still researching and doing my own, growth. But I have already perfected reversals, meaning I focus on what's working. As I am doing my own research, I focus on what's already working for me. As I improve myself, I am going to add more and more weapons in my arsenal. But if you have that one that is killing it, continue using it. Now, for those who are using, I don't know how, well, I cannot speak for people who trade continuations, but this was a very good continuation. But you see, it does not mean that once you are at the high of the day you start selling, or at the low of the day you start buying. You have to move step by step by step, qualifying and disqualifying. In fact, you should be disqualifying most of the instruments until you find that instrument that has the highest probability setup. So hopefully you got value from today's video. Make sure you like, make sure you subscribe, stay disciplined, stay focused, and continue reading books, especially the one that I recommended. It's called it's called Classical Chartings for Classical Charting for Stocks and, well, I'll put it in the description below. So just check it out. See you in the next video. Peace out.